From the old economy stocks, let's focus on the new economy and the IPO that's underway.
Yeah, absolutely. And I think Srikanth is walking in as we speak, and we'll be able to sort of go across to him in just a bit. I'm talking about the Fractal IPO, so that coming up in just a bit. Why don't I take a minute to just look at where the IT services stocks are trading at, right? I mean, let's just pull up the Nifty IT index. Let's look at the Infosys, Wipro, HCL Tech, TCS, and the likes. Last week, of course, was big damage across the screen on all these names. And on your screen now, Infy is down about a third. And this all, of course, started on Wednesday morning, our Wednesday morning, when, in the US session, all the EPAMs and the Globant and the Accenture, Cognizant and Gartner, all of those sold off hard, triggering this sort of, sharp correction of stocks here. Claude was mentioned, and how AI is going to really, it's not new, but basically, I think, those plugins, and we covered all of this extensively through the course of the last 4 or 5 days. I think we have the Fractal Analytics management now with us. It's a 2,800 crore IPO, which opens today. It's a combination of fresh issue and OFS. And we have Srikanth, co-founder, group chief executive, and executive vice chairman at Fractal Analytics with us. Srikanth, good morning. Great to have you with us here.
Good morning.
And I must say, you are, I think, really one of the sort of only pure play kind of AI companies. You're in the cutting edge, new age company, but you're not a new company, for those who may be wondering. You've been around, you've been actually around perhaps the longest in that space. So welcome to the program and congratulations. You're coming to the market now. So just, I think, we have this IPO and the conversation we will have, it's all happening in the backdrop of what I just described. All of this perceived or the real disruption, etc. is all happening, of course, in the US. So for viewers who are watching and who don't go into the nuance of this segment, that segment, they all see this big headline that AI is going to eat everyone's lunch, especially IT services. What's the message from you, Srikanth?
Yes. So I think it's clear that AI is eating software. And AI in general is one of the most transformational technologies of our time. And it is in some ways compressing everything. What do you mean by that? Something that takes, let's say, 10 people, 10 days to do it. What if 2 people can do it in 1 day? That means that the work has compressed. Now machines take a larger share of it. And therefore, do we need that many people to do the same kind of work? Now, this is not just true for tech services. It's true for broad variety of services, legal services, marketing services, and literally any workplace today, any big organization has to think, how many people do I need and how many machines do I need? For example, Amazon has 1.5 million or 15 lakh employees and about 10 lakh robots. They're at a 1.5:1 ratio, and they're slowly inching up the robots and decreasing the number of people. So they're going to hit 1:1. And this is going to happen in other industries too.
So, your clientele is the big Fortune 500, companies in that list, right? So how does it change? Is it deflationary? What does it mean for a business like you, Srikanth? The general argument we get is that the volume of work will expand, so that will take care of any price deflation, etc. Is that the way to think about it? Or you think, in a way, there's very few places to hide in that sense?
Yes. Tech has always been deflationary, right? And regardless of any technology you see, for example, cell phone rates, have crashed completely. So tech for the last 100 years has always been deflationary. It compresses, and what's called as the Jevons paradox plays in, which is essentially that the work expands so significantly that still you are growing as a net result of that. It's going to happen in the world of tech too. And what is different about this tech is that it not just looks at one aspect of life, it looks at every aspect of life. Having said that, the world needs 1000x more tech than it has today. Right? So what will happen is, now that a problem becomes easier, other problems get opened up, newer problems get opened up.
I'll tell you, Srikanth, where I'm coming from is that all the models are coming from the US. It needs to be integrated into enterprise workflow, etc. That was the tough part, and that's essentially where everyone said Indian IT comes and plays a role, like it always has. But now you got all these, as I said, those plugins which basically help in integrating, which is essentially the pain points, right? So if enterprises themselves decide, well, this is very easy to do. I need to put in some effort, but then I'm set, I'm done. I don't know if we are there yet, but is there any way out in that sense? Or I'm just sort of exaggerating to perhaps make a point and ask you that question, but do respond.
Yes, so it does happen that you can now bring in these AI tools. See, whenever there's a platform shift, this is a massive platform shift that's taking place. Now, these foundation models have become an element of everything that you solve. You bring in the foundation model, it compresses the rest of the work, right, which is required, because it is doing a lot of the heavy lifting as well. So, have we seen that foundation models start to play a role in everything in an enterprise? Absolutely. Is it early days? It's still early days. So what's going to happen is that earlier you used to do this work, let's take tech majors, right? They do a lot of data migration, SAP migration, things like that. These kinds of tasks used to take several months, maybe years. So not just Anthropic, but Palantir also showed last week that this kind of work can be done much faster with these AI tools. So if whoever is native with these AI tools can compress that, which means that in earlier, if you were charging 4 million for something, a project, now you're going to charge only 2 million for it or even 1 billion for it. But even in that 1 million, you can be more profitable because now a large part of the cost is taken out because you can do it with machines, number one. And number two is that it's not that there is only one piece of work to be done. There are thousands of pieces of work to be done. Therefore, it expands the number of things that you can do. Companies don't nearly have as much tech. If you take, generally speaking, companies spend roughly 4.5% of revenue on technology, right? This is a global average. This number is going to go from 4.5 to 6 in the next few years. So where is that extra tech going to be spent? So no CEO, no Fortune 100 CEO or Fortune 500 CEO is telling the street, hey, AI is most transformational, and by the way, I have found out ways to reduce my tech spend. No, they're going to increase their tech spend. It's just that they will find different places to spend that tech. And a lot of that, or some of that value, will go to the foundation model players. And that's why you're seeing an Anthropic going from 0 to 70 billion in 5 years, and similarly OpenAI going from 0 to 100 in 5 years. So that's the kind of acceleration you're seeing. Some of that is getting taken out from existing players, but a lot of new value will get created in the process.
And your position, Fractal now, coming to Fractal itself, is positioned in those places where they will look to spend more.
Yes, Fractal is a disruptor who's bringing these things into the workplace. Fractal is an AI native company. We don't solve technology problems. We don't do SAP migration. That's not our focus. Our focus is powering decisions in the enterprise. Companies make not hundreds, thousands, but millions of decisions every day. And these decisions, if you tweak it even slightly, what happens is your revenue growth can be faster, your profitability can improve, your new product innovation can get better. So how can that happen? How can you solve business problems with AI? That's where Fractal is. And one additional point I want to mention is that enterprises are extraordinarily complex. What you're seeing from the outside, a demo, takes a long time to realize. As they say, never mistake clear sight for a short distance. You can see it clearly, but it's quite far out. So we are talking of 3 to 5 years by which these tools will start to become part of the enterprise completely. Enterprise AI adoption is just taking off as we speak. It hasn't taken off so far.
You know, Srikanth, hi. The fear is that when companies are coming to hit the market with an IPO, they spruce up the profitability. Now, you've been profitable for the last 18 months, 6 quarters now in a row. What is your view on margins and profitability for Fractal from here on?
Actually, our situation was the exact opposite, because in the last few months, we've had, for example, one of our associate companies has had a loss in that. So our profitability is somewhat depressed because of a loss in one of our, not a subsidiary, but it is an associate company whose share of losses we do take. So we do expect that our profitability is actually going to significantly improve. We also have our first 6 months to last 6 months of the year, typically profitability jumps in the second 6 months period. So we also expect that
H2 is going to be better than H1, typically.
Definitely, by far. Because last year, we had a 73 crore profit in the first half and 148 crores profit in the second half. This year, we had 70 crore profit in the first half. Hopefully.
And adjusted margins or reported margins, you're saying it's going to be better for you going ahead. So what should be the number or range?
These reported margins include significant losses that we have to take from one of our associate companies called Crore. So that will also hopefully be better in the second half. So we expect that our profitability will be significantly better.
And growth will be mid 20% at least or more?
See, the industry is growing at 17%, and we have consistently grown faster than industry for several years. We hope to continue to be significantly better than the industry even future.
Grow 1.5 times the industry. That would be the goal?
That will be amazing. Yeah.
All right. Srikanth, welcome to the listed space, I should say, soon. Thank you very much for dropping by, and look forward to many more conversations. And it's an interesting, extremely, maybe too interesting time to be in.
Compress it in 10 minutes.
They say you should be careful of what you wish for, right? May you live in interesting times.
Yes, super exciting time, and thank you for hosting me here.
Thank you very much.
Thank you.